If you take insurance and you've noticed that your referrals are slowing down over the last year, this video is for you. A few weeks ago, I made a video about how most of us never choose a business model. We've just borrowed the insurance model by default. Well, this video is the next part of the story. It's about where that borrowed business model is actually headed. I'm going to give you the facts with as little drama as possible and hopefully a little more clarity. I'm Kristen. I'm a trauma therapist, a consultant, and a business coach for trauma therapists. So, like many of you, I have been hearing a lot of discussions in therapist forums and Substacks on social media about changes in the industry. There's about 3 things that I heard in the last couple of weeks that had piqued my interest. One was that Alma had notified providers that effective July 15th, Aetna would reimburse 90834s and 90837s at the same rate, and they would collapse the reimbursement rate from master's levels and doctoral level clinicians. The second thing I heard was that CAQH is transitioning to a for-profit structure and rebranding itself DataSpring. And the owners of this and the board members of this are all major health insurers. The third thing I heard was Aetna announced a new program called Mental Health on Demand, which is an AI-powered single-session intervention platform that they plan to launch in January 2027. As a trauma therapist in private practice who's entirely private pay, I thought, well, these really don't apply to me. But as a business coach for trauma therapists, they do apply to my coaching clients. So I decided to do a deeper dive. And what I discovered is this. All of these changes are going to significantly impact our industry. And that includes whether you're private pay or insurance-based. In the beginning, for now, it is going to impact our insurance-based practices the most. I would really encourage you to watch this video because it is critical to understand the workings of our industry and to have an idea of where we're headed. So first things first, I have to admit that I didn't really have too much of an idea of who Headway or Alma or any of these platforms were, so I did a deeper dive. And here's what I found. There are primarily now 2 ways to start an insurance-based private practice. The first is what I'll call the OG way, which is the way I did it. Independently panel with insurance companies. You deal with the initial headache of credentialing, you get your NPI, you complete the application process with the whatever panels you want to be on, and then once you're paneled, you submit claims for reimbursement based on the contracted rate between you and the insurance company. Now, the second way is the platform way, and you sign up with a platform such as Headway or Alma, and there are many others, and they handle the hassle of credentialing, and some provide other support for therapists. The important note here is that providers are not credentialed independently with the insurance company. They are credentialed through the platform. There is a financial arrangement between the therapist and the platform, so the platforms receive some sort of compensation from the therapist. So some structure it as a monthly membership fee, or some give a percentage reimbursement of whatever the fee is that they collect from the insurance company. If you have ever done any clinical consultation with me, you know that I'm always encouraging us to use current data, contextual information, historical and present day, and our knowledge to develop a clinical hypothesis that helps guide treatment. And I'm going to use that same approach here as we look at potential hypotheses of where our industry is headed. Let's talk about these platforms and what I hear all around big tech, right? So for purposes of our discussion, I'm really going to look at 2 platforms, Headway and Alma, because there are so many other platforms, but I don't want to get in the weeds of the platforms for this discussion in this video. Both platforms are backed by venture capitalists, or what we would call a VC. So when I hear therapists talk about the platforms, there's usually some disdain toward these VC firms, and I get it, but if we vilify them, I think we might miss some really important information. What is a venture capitalist? A venture capitalist provides capital or funding for businesses in early stages of growth. It's important to note that venture capitalists do not own the companies. They are investors. And as investors, they provide funding, and in a lot of cases, they also provide management consultation to the owners of the company. They typically look for companies in the early stages of businesses with high growth potential. So what this tells us about Headway and Alma and similar companies is that these business models of consolidating therapists onto platforms to deliver care are considered to have high growth potential by the VC firms. It's also important to note that venture capitalists are not long-term business partners. They begin with the end in mind, which generally means that they are looking at the exit strategy because this is how they make their money. So there are 3 typical exit strategies for venture capitalists. One is through merger or acquisition. The company that they funded gets acquired by another company or acquires another company and becomes bigger. The second is an initial public offering or IPO or going public. The third is probably not ideal, but it's when the company fails. So that happens with a lot of these investments. Once the company achieves the next level of growth, typically the VC exits with their profit, but they may maintain maybe an equity position or a seat on the board if the company goes public. I just want to note here, this is like a super simplified version of this process. It is much more complicated and detailed, but for what we're talking about, I think this is a good description. So what does this mean for us as therapists? What it tells us is that these platforms are in the growth phase of their business, with the goal of being absorbed into a larger company or becoming a larger company themselves by acquiring other companies and or by going public. So an example of this actually is Alma, because in January of 2026, it was announced that Spring Health will acquire Alma, and that acquisition was finalized in May 2026. Headway is still operating independently and has not been acquired or filed for an IPO, but we do know, based on history, that this is probably some way that they're moving, right? Now, the next important thing, other than the VC firms, is the insurance company involvement in these platforms. So there are 2 primary ways that insurance companies are involved in the platforms. The first is through direct investment through their own venture capital arms. For example, Alma's investors include Cigna Ventures and Optum Ventures. Those are both venture capital arms of the larger organizations of Cigna and Optum. Okay. Headway's investors include Healthcare Service Corporation, which is the insurer of many Blue Cross and Blue Shield plans. Now, these are not the only venture capitalist funders of either one of those. These are just the insurance ones. They have many other venture capital firms are involved. But the important point is that the insurance companies are putting venture capital money into funding these companies because they expect these to grow and to give them an investment in the long term. Okay? So what we can hypothesize about these direct investments based on the knowledge that we have, right, about how venture capitalist business models are structured, is that the insurance companies expect these platforms will eventually provide some return on investment through either a merger, an acquisition, or going public. Which leads us to the second way insurance companies are involved, through strategic partnerships. If the insurance company wants their investment to succeed, they develop partnerships with the platforms to help them grow. Alma's strategic partnership includes an Evernorth Cigna network partnership and an Optum distribution partnership. Headway's strategic partnerships include an Anthem BCBS of California and Cigna portal placement. So what is a strategic partnership? Insurers' partnerships provide these platforms with privileged distribution, easier member access, or preferred placement in care navigation pathways. Let's take Cigna Insurance. If you have access to their patient portal and navigate the process of finding a therapist, you will see multiple options, all of their strategic partnerships. You can click on a link to Alma, you can click on a link to Headway, or other similar platforms. And at the very bottom of the page, you can click to a link of a list of all of their credential providers, which is the only place the OG independently contracted therapists are listed. The navigation encourages their members to utilize one of these platforms. If you are an independently contracted clinician and have noticed your referrals dropping off, as I've heard anecdotally from many therapists, this is most likely why. You're buried in the independent contractor listing. So let's talk about the business model for these platforms, because understanding the business model is key to us understanding where the industry is headed. In a nutshell, The platform credentials with the insurance companies. The clinician does not. They negotiate rates with the insurance companies. They charge a fee to the therapist through different methods or strategies. And then the platform provides the therapist with the referrals. Let's talk about the benefits for a therapist. So it's actually not hard to see the benefit to a therapist for wanting to launch into private practice. There is ease in credentialing and referral sources. You can fill your caseload quite easily over a short period of time with limited administrative work. What is the benefit to the insurance company? Well, I think it's a good question. Why would an insurance company want to invest in this model? One, they negotiate one contract per platform. It reduces the administrative burden of contracting with individual therapists, and it provides them an ease in making changes to rates and reimbursement policies. So an example of that is Aetna's recent announcement that they will be collapsing reimbursement rates for 90834s and 90837s and paying doctoral level clinicians the same as master's levels clinicians, but only for Alma providers. They updated one contract, not thousands. Alma, and now their parent company, Spring Health, are the ones who have to manage the backlash from providers, not Aetna. So the question on many clinicians' mind is valid. Will Aetna be instituting this across the board? And I think I've heard that everywhere, and it certainly caused a stir. But I think that's really hard to answer because the dynamics are much more complicated than they appear at face value. Because honestly, at first I thought, well, this is probably a test of whether they can get away with it, right? But after more research, I realized the acquisition by Spring Health creates some more complexity, and the story becomes multifaceted. I'm not going to go into further details about that acquisition here for the purposes of this post, but if people are interested and want to hear more or like the way that I've kind of organized this information, please let me know, and I'd be happy to do other posts about it. While I'm not sure the entire motivation of the Aetna Alma change is a test, I do see it giving Aetna important feedback that will shape decision-making about rate changes in the future. The most important piece of information it could provide them would be to see what kind of impact it has on provider network access. Does Aetna lose a significant number of providers with this move? So let's talk about network access requirements. Because how does losing providers impact Aetna? All health insurers have to maintain network accessibility, which means they have to demonstrate their provider networks have enough providers of the right types within a reasonable travel time and wait times so that members can access care. Insurers demonstrate compliance using time and distance standards, provider to enrollee ratios, and wait time metrics. And then regulators use this information to decide whether a plan can operate in a certain state. If you've ever tried to independently panel with an insurance company and they have denied entry saying they have sufficient providers in your region, this is the regulation they are using to substantiate that decision. And this is why the announcement about CAQH matters. So if you've stuck with me this long, you're probably saying to yourself, why join Alma or Headway? Why not just independently credential? Yes, a headache in the beginning, but it seems like it would be safer to me, right? The answer is possibly, but this new development warrants consideration. In January 2026, CAQH went from a nonprofit, similar to like a utility, to a for-profit entity owned by 12 shareholder companies, all affiliated with major health insurers, including United Health Group, Centene Corporation, Aetna, the Cigna Group, Elevance, Humana, and a coalition of Blue Cross Blue Shield plans. And then on June 8th, 2026, CAQH announced a rebranding of CAQH to DataSpring, which means that insurance companies now own the data of all providers who are independently contracted with the insurers, the OGs, right? In the past, when you were credentialing with an insurance company, you would allow access to that insurer and they could review your information to determine whether they would contract with you to be on their panel. Now these 12 insurance companies own your data, which means the data can be used not just to streamline administration, but also to strengthen payer control over network design, directory management, and partner, platform, routing. My hypothesis is that this creates a long-term risk for the OGs. As more of our clients are directed by their insurance companies to the platforms, the broader the platform networks become, and in turn, it improves the network accessibility for insurance companies. So, my belief is that over time, the insurance companies will opt to not renew independently credentialed clinicians and will not allow new providers to join their panel. Even if nothing changes overnight for any one therapist, the long-term risk is that independent clinicians lose visibility, leverage, and bargaining power, while payer-preferred channels become easier for members to find and use. So let's put this all together. Here's my hypothesis based on the current data, contextual information, historical and present day, and my knowledge of the industry. Headway and Alma offer an easy on-ramp to private practice for therapists. Insurance companies, since they invest and have strategic partnerships with the platforms, then prioritize referrals to these platforms. Independently credentialed providers start seeing a decrease in referrals because they are buried in thousands of provider listings. Headway, Alma, and similar platforms expand their network of clinicians, and then insurance companies begin to test if they can reduce their rates through the platform and retain network accessibility requirements. Once they can fulfill their network access requirements through these platforms, they may begin terminating, through non-renewal, independently contracted providers and begin to limit or not offer altogether new independent contracts. So what's the benefit? I think because once all providers are on one or two platforms that has one single agreement with the insurance company, they can reduce rates quite easily and possibly with little pushback. So if you're independently credentialed with insurance, this impacts you as well. First, through the decrease in referrals, which we know is happening now, and second, through potentially losing your contracts with insurance, if my hypothesis is correct, and they decide not to renew. And one more thing. There's another layer being developed and tested in the industry. So both Evernorth and Aetna are experimenting with their own in-house behavioral health offerings. Evernorth Behavioral Healthcare Group launched in 2024 to deliver outpatient behavioral health to its members. It launched with 1,000 providers in 6 markets, expanded to more than 5,000 providers across all 50 states as of November 2025, and they have plans to grow to more than 15,000 providers in 2026. In May 2026, Aetna announced Mental Health on Demand, which is anticipated to launch in January 2025 to self-insured customers, which will provide a single-session intervention platform enabled by AI. Spring Health, with its acquisition of Alma, is expanding into the insurance arena by offering a behavioral healthcare, what I call a carve-out, to large companies such as Microsoft and Target, and these are advertised on their websites, where they offer the behavioral health component in addition as a carve-out from the health insurance component. All are experimenting with AI-assisted technology, which will also change our industry significantly. So what does this all mean? Now, I wish I had a crystal ball and I could tell you where we would be in 2 years, but alas, all I can do is hypothesize. And that's what I'll do. There is so much business activity around mental health solutions right now. We all know, and if you've been a therapist for a while, you've known for years, that we have a mental health crisis in this country. But it now appears that Wall Street has taken notice and realized there's a financial opportunity here. And this is what I think it means depending on your place in the life cycle of a trauma therapist. As a newbie therapist wanting to be in private practice and have more freedom and flexibility with your schedule, I think Headway, Alma, or however these platforms end up shaking out in the end, will be your entry point. You will get clients, experience, and a pretty steady referral source. Direct credentialing would become less strategically valuable over time because insurance companies will increasingly flow member traffic, directory visibility, operational advantages to these payer-preferred platforms and partnerships. For OG therapists, I believe your referrals will continue to slow as you become buried in the directory listings behind insurance company solutions, platform strategic partnerships, and eventually AI solutions. So if the thing that's coming to your mind right now is something like, Kristen, you're depressing me, I get it. I've been struggling with what this all means for our profession, and I've got to admit there are plenty of times that I've felt pretty hopeless as I've been researching it all. I'm pulling out some positives for you. So, providers on Alma are fighting back about the Aetna changes. If Alma clinicians all agree to drop Aetna, that's a pretty significant message to send. And then Spring Health, who is the owner now of Alma, they have to renegotiate the contract. And they have more leverage than individual providers. Having easy access to launch private practice through these platforms, I think, is positive. There's a low barrier to entry, and if you are just starting off the field, it can really be a great way to build your experience. Plus, if you join the platforms, you're not wedded to one. You can be on multiple, which diversifies your income. You can be on Alma and not take Aetna while being on Headway and taking Aetna. But you can also use the platform as a steady income stream while you develop other areas of your business. So what's the future of private practice, you might ask? What does this mean for us as trauma therapists? I think, simply put, the platforms will continue to make marketing more challenging for us. But there's a reframe I love to offer therapists, which is this. Marketing is relationship building. And relationship building is your superpower. The techniques and tools and strategies are all learnable. And remember, many of us have navigated these changes before. It wasn't long ago that the only way to advertise your therapy practice was to place an ad in the yellow pages. Yes, I'm dating myself. And when the internet took off, we started developing websites and trying to rank on Google. For trauma therapists who want to have a practice that doesn't include the platforms, I believe it's possible, but we have to shift to a more active state as a business owner. Once we identify as a business owner, we can look at our business through a lens of income streams and diversification. Diversification means avoiding total dependence on any one player or one platform or one referral source or even one business model. It may include a mix of selective platform participation, maybe some private pay, providing consultation or supervision, or developing groups or teaching. I believe high-quality trauma therapy will be needed more than ever, but convincing people there is a difference will become harder. There is no doubt we will have to get better at visibility and communicating who we help and how we help them. So much of how this industry process is unfolding is going to be out of our control. But what we can control is whether we keep waiting to be found or we step into running our practices like the business owners we are. If you're interested in learning more about running your trauma therapy practice like a business, click the link below to either register for my Transform Your Trauma Therapy Practice program or get on the waitlist for the next cohort.